And joining us for more is Mark Gardner from MPC Markets. Now, Mark, a wrap of the leaders and laggards for 2024. What did we end up seeing?
In the ASX 200, is obviously Mesoblast had a late run, up around about 900%, but Prime Medicus for the ASX 50, ASX 100 was the best performer for the year, up around 160 odd percent. Unfortunately for the resources sector, mineral resources was the top laggard, but the information technology sector was by far the best sector for the year, around about 49%, followed by financials, consumer discretionary, and then obviously staples, materials and energy were the laggards there as well. But obviously we've seen a little bit of a bounce in oil prices and a little bit of a bounce in the uranium sector over the last couple of weeks during the break, which is probably expected given what a poor performance they sort of put in for the year. So we'd hopefully expect to see those sectors bounce a little bit, considering as well. Obviously, there's been a few more murmurings about China stimulus over the break as well. So and I think Chinese bond yields have been heading lower. So we probably expect there to be more stimulus, and there's been bits and pieces come out as there always is from the PBOC. Not a particularly clear picture, but more hints towards more stimulus.
And those leaders and laggards that we saw, do you expect those trends to continue into this year, or do you see any shifts into different sectors?
I think information technology is a bit of a different game. The financials and consumer discretionary I see is quite stretched in terms of valuations. They're going to have to hit a very high bar when we come into earnings. They might be priced, at about fair value, but I really can't see them beating expectations from here. They're at really historically high PEs. So, but I do expect the likes of the materials sector and the energy sector to start a little bit of a bounce, probably more so the materials sector, mainly due to the fact that you've got really high quality companies there like BHP, Rio, Fortescue, etc., that are at mid-single digit PEs. So, and they've got really nice high dividends, and the worst is probably out of the way for China, and we will see more stimulus. And we're obviously an ally of both China and the US. So if there is a bit of a tariff war, I think our ability to be friendly with both nations probably bodes very well for our raw materials as well. So and if we do see a broader market pullback, the material sector's already down a little bit as it stands, so it's probably not going to drop as much. I think those the financials and consumer discretionary sectors are a little bit more vulnerable to a broader market pullback.
And last week we saw uranium stocks jump. What was behind that?
So Cameco, which is one of the two largest uranium producers in the world, Canadian company's got a project in Kazakhstan, which the government there, basically there's some roadblocks to approval, so they've halted production there. There was some ambiguity around whether they were approved or not, so they've halted production basically, which is going to diminish supply. Kazatomprom, which is the Kazakhstan government's producer of uranium, as well as them and Cameco progressively had production downgrades over the course of the year. So we saw the likes of Boss and Paladin rally, anywhere up to 10 to 15% last week. But again, they're coming off really, really low prices here at the moment. So I think they've got quite a bit of upside to go potentially. And we've got the likes of Microsoft saying they could potentially be spending $80 billion on AI data center infrastructure this year, which came out from CNN over the weekend. And that's they're going to be very likely, they're not going to be pulling from the grid. They're going to be these, either small modular reactors or nuclear powered. So, I think that'll be a bit of a tailwind for that sector over the coming year.
And you mentioned before about China's stimulus. So what is China's latest efforts to stimulate the economy?
They've targeted the bond market, they've targeted local government debt, they've tried targeting the consumer, but it is a little bit ambiguous. There's a lot going on there at the moment, and not a very clear message, which is what markets generally like. But I think where they're targeting overall it'll probably be a slower reaction from a market's perspective, but from the economy's perspective, I don't think them having a clear message doesn't really make any difference. It's sort of the difference between Wall Street and Main Street. Most of the measures I've seen so far have been at rectifying an existing problem, reducing the local government debt load, which will start getting the regional economies going forward. It's a bit of a wait and see, which markets don't like. We like to have a very clear, we're going to spend this much money, but unfortunately, it's not the case at the moment, and there's not a lot of transparency around it. So, very, very loose language in terms of fiscal stimulus as well. It's basically a change in one sentence over the last 14 years, but how significant you think that is up to you, I suppose, as an investor.
And trade wars are in focus this week as well. We saw Biden block that move with US steel. How do you see that playing out?
I think it's probably smart long term. US is the biggest steel importer in the world, and obviously they're with Trump coming in and threatening a whole range of different tariffs, etc. He's basically alienating nearly all of his major steel partners, apart from Japan. So I think it's probably Biden doing Trump a little bit of a favour, to be honest. I don't think they want foreign interests taking over US steel at this stage. Probably more so for national security purposes, because if those trade wars do kick off, if Trump actually walks the walk instead of just talking the talk, and we start to see restriction in their ability to get steel, that's a big problem for the US as a broad economy, because you can't build anything without it. So, and you've actually seen China already reduce the ability for the US to get a few critical minerals which harden steel, which would be mainly aimed at their defence sector.
All right. So the week ahead, what have we got on the calendar?
On the calendar, not much really domestically. Obviously, we've got our CPI, and I think we'll probably be really waiting for a clearer picture on the retail sales numbers, how buoyant the consumer was over the Christmas break here. Fed speakers will be interesting. We've had Mary Daly come out overnight actually and say inflation is going to be more stubborn and it's going to be hard to get it back below 2%. And that sort of backs up Michelle Bowman's comments leading into the FOMC meeting last year now. So the Fed is increasingly sort of feeding out little comments about concerns around inflation. So I wouldn't expect there to be any more rate movements at this stage while they're talking like that. But we will get more clues because I believe there's about a dozen Fed speakers this week. And then obviously payrolls on Friday night will probably be the big show, to be honest. Expected around about 150,000 and 4.2. But any weakness there could send the market firing either way, or any strength as well. So yeah, it'll be thin volumes. I think we'll see a return to definitely better trading conditions this week, but it'll still be fairly holiday orientated. I don't think we'll see any major volume come back until probably next week or the week after.
And you touched on the range of Fed speakers speaking this week. There seems to be lots of differences of opinions at the moment. Clearly some divisions in the Fed as to whether they should start cutting. Do you see this being an issue?
Look, I mean, there's always divisions. I guess you've got to look at, there'll be some hawkish and some dovish. If someone who's hawkish says something dovish, you probably pay a little bit more attention to that. Like I said, it's more of the breadth of the comments. Like I said, I've been watching interest rate markets for nearly 30 years, and that Michelle Bowman comment leading into the FOMC was really a signal that they tend to drip feed little comments like that, not just ambush the market with it. And then obviously Mary Daly coming out with a similar comment. So you'll probably have to look at it as a whole and see what comments. And then you've got the Fed minutes coming out, I think, as well this week. So that's a bit of a clearer, more structured outlook. But I think people might be actually listening more to the Fed speakers this week rather than have the backward-looking minutes from December.